Hello, I'm Finola Burke from RaaS Research Group, and we're catching up today with Keith John, the Managing Director of ethically motivated consumer financial services business, Pioneer Credit, ASX ticker PNC. Welcome back, Keith, and thank you for joining me.
Thanks so much, Finola.
So you've just announced that you've signed a new $272.5 million four-year syndicated senior finance facility agreement. This has been some time in the making. Could you quantify what it will deliver for Pioneer Credit in terms of savings and scale?
Yeah, for sure. Thank you, and thanks for the opportunity to talk to your subscribers. Look, for Pioneer, this is really the culmination of the last few years, getting through the corporate action that existed for us. We had a very good financier in Fortress, but that's a very expensive facility. We've now got a facility that has plenty of room for us to move in it. It'll be drawn to $222 million on day one. It's going to save us sort of north of $8 million a year just in interest costs. And there's $50 million of headroom. So that gives us the ability to supplement our free cash flow, sort of north of $70 million in the coming year to continue to grow our business from here.
And the new facility has been backed by some significant players, Nomura, Challenger, Key Financial Group, Revolution Asset Management. Do you see scope for further financing collaboration with these parties?
For sure. I mean, part of the reason why when this syndicate was built was that Nomura got these groups involved, in particular the Challenger and Revolution and Keyview, is the capacity to grow further. You know, we've got an incredible opportunity that sits in front of us over the next couple of years. In all likelihood, that's going to involve significantly more capital than just the $50 million of growth that we've got there. And these guys have the capacity to grow as our funding needs grow. So in addition to producing lots of free cash, which will help us reduce leverage over time, we've also got the ability to increase our funding capacity for these opportunities that arise. And, you know, we expect them to arise across a range of things. There's M&A opportunities in our sector. There are a broad range of opportunities that exist in the financial services markets where, impaired credit's been held back for a long time, and Pioneer is well positioned as a differentiated servicer and one that really looks after consumers and brands well to grow further and buy these very large opportunities.
Keith, you touched upon a little bit of this, but with the challenges we're seeing in both corporate and consumer markets at present, what market opportunities are you seeing for Pioneer Credit?
Yeah, I think, look, there's a range of things. I mean, clearly, there are groups within our sector that are having some challenges, and that's been played out in the press well. So there are some opportunities that exist within those groups. There's certainly opportunities that exist in the sort of the fintech, that newer, new to business sort of market that's existed or sort of grown dramatically over the last few years. And then within the big banks, you know, not all of the big banks are selling as yet. You know, one of them in particular hasn't sold since pre-COVID. So there's a lot of opportunity that exists as those guys come back to market. And really, we're in a duopoly now. There's us and one other. The top end of town's really split down the middle. We share those opportunities, and that's a very big opportunity for Pioneer. And then at the fintech layer, that's really where we come in our own. We don't compete with our clients, and that's a big thing for those guys. You know, they're growing their businesses, they're growing brands. They don't want to be selling their portfolios and the management of their impaired credit to someone that competes with them, and that's a very strong part of the Pioneer offering. We're completely aligned. It's important we're aligned to shareholders and it's important we're aligned to consumers, but you also need to be aligned to your vendors. You don't want to bite the hand that feeds you, and certainly we work very closely with them, and we think there's a big opportunity. We know there's a big opportunity over the coming sort of 12, 24 months with those guys.
And without preempting your full year results, were you happy with how FY24 ended for Pioneer Credit?
Yeah, look, I mean, you know, you'd always like to close things out like refinancings earlier. There's a lot of party involved, and of course, you know, $270 million is a lot of money. So these things take a little bit of time. We had a great year operationally. Really, really pleased with the way we executed within the business, the way that we manage cost. I mean, cost of living is a very big part of every business now, and certainly wage inflation is a part of that. We manage that really well, and we manage that well because our people are committed. They're focused on finding solutions. They get there quickly, which means it's good for the customers and good for us as well. So that's gone really, really well. And of course, we closed out the refi. So we couldn't be happier with the way 24 finished. But, you know, it's the 2nd of July today, Finola, and we're ready for 25. We've got a lot of ground to make up. We've got a target of $18 million after tax. Next financial year, it's only 12 months away. We expect to deliver on that and well deliver on that. And that means we need to hit the ground running, which my team has. And, you know, we're very excited about you know, what 25 has for us.
Well, thank you, Keith, for taking the time to speak with me today. I'm looking forward to catching up with you over the course of the next few months to check on Pioneer Credit's progress.
Thanks so much, Finola.